What a week. It feels like Friday already to me.
It does.
How about you, Josh? Welcome back to F.A.C.E. Waiting for your mic
Hey
to
guys, how you
click.
doing? Great to be back.
Good, Josh. How are you? How's your dad doing?
Doing well. Thanks so much.
All right. So I know that I think you call your service layup trades.
Yes, sir.
So I could use a few because I've been getting stuffed every time I
Can't we
go
both?
up.
Can't we both?
Yeah. So maybe you could share your screen and share with us what's on your radar, buddy.
Sure.
Okay.
So let me get it shared up here for you.
Okay. So you use is that market profile on the right-hand side and left?
Yeah. So I use market profile and Fibonacci retracements are my two go-tos. Let me get some of this other garbage out of here for you real quick. There you go. So yeah, this is we're looking at the S&P futures. So in Fibonacci retracements and Fibonacci's and in profile, you're looking for 61.8 is the golden retracement, and the counter opposite is the 38.2. And so what you see here is a combination of those levels laid across the screen on different time frames. The tertiary starts at the all-time high here back in December and runs down to the lows in June. And you can see that off that bounce, we come right up into the 61.8 here at 43.61.5. It's
Since
also
you
the
keep
downtrend
bringing up
range.
61.8, Josh, you ever hear my 61.8 poem?
No, but now I'm so intrigued.
All right, here it goes, man. 61.8. Feel it resonate. Right when you think you've learned the tricks, it stretches out to 78.6.
I like that.
All right, go ahead,
and
buddy.
how true it is, yes.
All right. So do you think we're going to dig in our heels here in front of the NFP tomorrow and hold this channel in S&Ps here?
You know, just to
NASDAQ's broken. Okay.
I do. Yeah. And see, and here's the problem. It's what I think we're just gonna see coming is we're coming into that 61.80 that we've been talking about on the NASDAQ here. And it's untested. Yeah. It's our first test into it off the low, about 12.090. And the market is in general a short-term oversold. I am expecting that if we do drive into this 12.089 or just below it, as your home so eloquently states, that this is going to be a good pivot bottom for at least the shorter term. What's happened is since our last options expiry, we've really ran into like a negative gamma feedback loop, if you will. There's puts being bought and puts being rolled out with very little calls being bought. And
all
so
the calls were bought above at the highs and above 4,300 in S&P.
Right, exactly.
So now they're buying a lot of puts.
Yeah, so puts are rolling from above 4,000 down into 3,900, and so here, let me just back over to that one for you. And so what we're seeing is that it's spot gamma is what I use for all my options data. They're great service. Not trying to plug too many people, but except me and you, of course. But so what's happened here is that there's a substance of puts at 3,900 level, and what's happened is the curve of gamma has flattened down here. And what that represents is that dealers are no longer trying to buy volatility to protect themselves. They've got an ample amount of such. And for that reason alone, in the options profile idea is that the 3,900 level should probably cap the bottom unless they continue to roll those lower. They haven't rolled them lower since the 4,200 test. They've been sitting right at 3,900. And so pairing that out with the 61.8 here and the 61.8 on the NASDAQ, personally, I would look for the short-term bias to become that we are oversold, that we'll probably come back up into about, we'll hit 4,000 and 40.64. The issue again is the negative feedback loop for options generally exists from options expiry to options expiry. It's really hard to break the feedback loop. You need a major event to do so. And so options expiry does it. FOMC meetings usually can get it done.
How about a weak NFP number tomorrow, Josh? Would that do it?
And I'm thinking if we see today we open and we drive through our Globex range here, me go and do it.
And we're getting a question from our attendees. Josh, which VP on TradingView in green? What is that?
Yeah, so this is the visible session profile.
Okay, Jeff, you got that? That's it. And he gave you the name. It's not custom?
No, it's called visible range.
Okay. All right, thank you. Thank you, Josh.
So what I'm thinking here, Dale, is that we've built out this shorter term volume here in Globex low at about 39.30. If we open market and we drive through that and we trap short-term Globex, we can get into that 61.8, and that's going to be my entry long for the market into tomorrow. Like you said, we do have what is that
I would call a major event. Yeah, we have NFP.
39. Yeah, NFP. And I mean, I wouldn't call it a major event, but it's enough to bring the market out of an oversold status. And so
39 even, Josh? I'm sorry, I didn't catch it. 39 even?
Yeah, 30. 60? Well, so the 61.8 is 39.02. The put wall is 3900 flat. So
okay, got it.
I have an order staged at 39.03. Actually, right now, I staged it before market closed yesterday, just in case we came in overnight.
Okay, got it.
And so that's what I'm looking for this morning is we lose the shorter term volume from Globex session 1900 into 7. We drive lower. It traps this range in the short term. They have to close to cover. We force down into 3900. We see market makers step in to supplement their flow, and then we get that drive higher. First target would be this volume node up here, 3980 to 4000, and then it opens back up into 4064 and 4085. I am of a mindset that it's going to be very difficult to move above 4085 here. But volume profile does say 4140 is an option. I try not to play through my retracement levels. I'd rather get a little bit and not have to worry about losing it all. So,
okay. So I see under your charts, I know those are volume bars. What do you have underneath the volume bars? What is
Sure. Yeah. So what this represents, this is DMI. So the red line is the selling pressure and the green line is the buying pressure. A lot of people just think it's buying and selling, but you can actually break the two ideas apart. There's a lack of buying and then there's excess buying. There's a lack of selling and then there's excess selling. And so what this indicator does and what it represents is to show you that break apart. When the stock market comes down, is the stock market coming down because it's being forced down through sells or because there's a lack of buying? And so this is basically what this. The yellow is the accumulation and distribution of the market. So any green candle is labeled as any green candle is labeled as a buy. Oh, my downstairs computer's like, hey, it's time to turn on. Boy, stop that. All right, here we go. So for the best, last time, any green candle labeled as a buy will increase the line, and it's easier to see here on like a 15-minute in session. Okay, it's gonna be
you do drill down to 15 minutes for
if I'm intraday trading, I'll switch over to a 15-minute. If I'm looking for trades, if I'm trying to find setups, stock patterns, charts, etc., oversold, overbought status, I usually trade in the dailies and weeklies. I try to start on the longest term time frame and then drill down from there.
You consider yourself a swing trader, day trader, or position trader?
I started as a day trader, and then I moved into swing trading. Some days I question why I ever made the move. Other days it's great. It's certainly a change, trying to switch gears from in and outs to holding, and the drawdowns are certainly quite a bit different as well.
Yeah, and so are the gains.
Yes, most definitely.
The time the market to work for you.
Yes.
Okay. So I think you have the S&P gave us very, very nice coverage on, some areas to pay attention to in the next 24 hours. Do you mainly just trade stock indexes?
No, I trade across the entire spectrum. I usually do my research is on Saturdays and Sundays, try to find, I run scans for usually compression scans are usually the thing that I would look for the most, stocks that have come into a tight range and, there's a basically a battle between buyer and seller in a tight range, and I look for those releases out of those. No different than the right side of an inverse head and shoulders or a head and shoulders pattern, or something of that nature, a rectangle bottom, ascending triangle, patterns that have good track records and good statistical historical records are usually what I try to key on.
Would
the most.
Would that include the ags, specifically the grains? Grains I always felt were real good technical markets.
Yeah, grains are really great at technical market. We traded corn a lot earlier in the year when that was the big thing, and wheat.
What do you think of wheat now? It's been trying to grind out the bottom. I don't know if you're, I know I'm just pulling this out of the air for you. But,
oh yeah, you're good. Don't worry.
Okay, so you see that formation. I don't know what your work would tell you, but
yeah. So again, like we see. Yeah, and so we see. We see where that bottom is coming in, right? The 61.8 here at 7.596.
Isn't that a coinkydink? 61.8.
Isn't that a coinkydink? How that works? They trap the bottom out like your poem references, and then they recover it, and now we're into a consolidation pattern. I think the only thing that worries me off of this chart, other than this level up here, the 894.6, is we're starting to make likes on the right and the left side. We see you're trapped here on the left, and now you're starting to trap here on the right with a multi-topped head on the top as well as the downtrend. And so what would worry me here is if this is a consolidation to break lower through that range. Would honestly be my worry. We've got the high here. We haven't been able to see wheat violate the previous high here at 474.6 or 874.6 over here on this high as well. We have the test here and then we break. There's no retest. There's no recovery here of price to come back and back test it, and we see that failure back through range here. And so for this wheat market to open up, need more coffee. I'd really like to see this 476, 494 break to bring us higher. Elsewise, I feel like it's more of a consolidative pattern. But you're right. We see the accumulator down here in the yellow, like we discussed. It's showing that markup that you're talking about as well. There's an accumulation down here in this base, and for that reason alone, I certainly wouldn't short wheat. But it wouldn't be my go-to until we break out. It kind of looks like what we would call a rectangle bottom here.
Yeah.
Like this. And so the break is out of this pattern, out of a rectangle bottom, it's about 80% of a move of the size of the range. So 740 up into 840. So it's 100 points, called 80%. And so you're looking for 80. What's that?
A buck on a contract, futures contract, is $5,000.
Oh yeah, okay, yeah, $5,000.
Yeah,
and so the range here's and so the range of the rectangle is 100 basis, and so the break says that the stats say that a break outside of this box that we've drawn should move price 80% of the range of that consolidation, which, so we're talking, 80 bips, 80 basis points, however you want to call it, of a break, either way, upside or down, out of this box. So is wheat tradable here? No. But is wheat tradable eventually? Most definitely, yes. And if you're looking at 80 points outside of either direction, then, you're looking at 666 up into just about 930. And isn't it a coincidence that the previous top of the wheat market was here at 936? We have this, we have 5 daily tops out here, and then we cause failure. And good
on the fly analysis. How about anything telling you about U.S. dollar yen made a new high for the move this morning, and the dollar is trying to make a new high? Anything in the dollar or yen that tells you that we might be getting close to some type of terminal move here?
So let me start with you with DXY. I've got it charted already. I'm sure I do have the yen charted, but I don't trade it as much. But just in the Dixie, just looking at Dixie here, there's nothing yet that says, caution, this is coming down. If anything, this is representative of something that continues to carry a bid. It's a very, to me, it's a technical move. We set that high again. We test the 61.8 of the previous range at 104.73. It's supportive of that, and then we break higher. The pink level is my longest term level. It's lifetime. It's based on the entirety of the chart from the very low to the very high. And so 106.61 was broken back over, and not only was it broken over, it really wasn't even a problem, right? We extended through it. And it takes a lot to drive price that high through in the dollar and through a major support level or resistance level. And now we see high consolidation, high tight flagging consolidation here. I honestly wouldn't be surprised to see the DXY make new highs. Have the next reference point is 112.17 on the DXY.
Okay.
And again, if you're trying to trade it long, this is just on a daily closing basis. You don't have any daily candle closes below 108.4 in the entirety of this consolidative phase. So really, the stop on the long here is 108.4. And if you can get a better cost on it, that's fine. But overall target for me would be already at 112.17 for DXY.
Okay.
Let me see if I got the JAPY. Oh, hey, I don't have many lines on USJPY. You see the same thing here, and the accumulation distribution is showing you the same spiking action, right? There's no negative divergence in this. It's recording all the buys and moving the line up, and all the sells and moving that line down. And so while we do have resets here within the consolidative areas that we're having, the overall move continues to drive that price higher. We have the USD JPY already breaching highs. So if it can continue to hold that 139.38, it opens all the way up almost into 145. That's 144.948 up there at the extension level. This one isn't as clean as the DXY. There's not a lot of consolidative action up here. Like on the DXY, we saw almost 2 weeks of full daily consolidative action. Here we just have break and drive. So we're not creating as much support below price. So I wouldn't be as confident in taking a position in the dollar yen as I would in just taking a directional play out into the dollar. I don't know, to be fair, I'm not as versed in Forex as I am in stock and equity. So I can't tell you the ramifications of that analogy or that suggestion.
Do you show any accumulation beginning in a sector that's been completely massacred, the miners?
It's GDJ, right?
Yeah.
GDX. GDX.
New lows.
Yeah, new lows. Nothing is coming into it. I haven't even charted it, that's why. Yeah, nothing has come into it. We are coming into this massive volume profile, and this is on a monthly chart, right? So we would expect volume as when approached from above functions as support. Volume when approached from underneath functions as supply. Right. And so we would expect for this area to 23.3 or so to be supportive because of the consolidative action previous in range here.
Okay.
We can see again that tight consolidation that ends up breaking up and out. And so for me though, because move this to the background real quick. That's the only problem with having fun colors. They all don't jive well together. So for me here, because we've broken back below the 61.8, 25.15, I cannot create a long position out of this. I could play an iron condor to contain price within the range here from 21 to 25. But until price can reverse and recover 25.15, I can't play this long. I hate to keep bringing up the analogy of your poem, but it holds true again, right? If we place the 78.6 on there, it's almost at the base of the box, and so that to me this is risk, even though it's in oversold condition. Until we can break 25.15, I would think that we can retest it, and then it's consolidative in nature.
Okay, we're starting a new month. Strongest idea, highest conviction trade for September.
Completely sideways for the NASDAQ for the foreseeable month. I think that everyone is
strongly neutral.
Strongly neutral. I think everyone is everybody's seeing the increase in volatility. Everybody is excited about the volatility. Everybody sees the opening ranges and the drives, and everybody's preparing for such. But coming into, everybody's either wants a crash or thinks this is the exact bottom and we're going to go to brand new highs.
Yeah, and that's a big question. What do you think, Josh? I mean, we had that nice rally from June. We've pulled back 61.8. Is this just consolidation of the rally from the late June low, or the resumption of a bear market?
So let me get these off here for you.
And we'll wrap it with the answer to that.
All right. So I don't think this is like us setting a low as a drive back into the new highs. I see this as a short-term oversold bounce, but I don't see enough behind the underlying charts, the top weight charts, Apple, Microsoft, Tesla, etc., that suggest that we should move much lower. And so I think that we're going to come into a period of stall where we wait for direction from the Fed, where we wait for the actual policy to be tightened in a little bit, where we know the resolve. I think that you see range bound NASDAQ from about, let's just call it 12,000 up into 12,700, 12,800. And I would assume that probably perpetuates through the course of September, if not through October as well. If you come in and you strike a trend across the tops here, you see that the resolve breaks down the must hold support 1290. We get that downtrend cross in December here at the end of December, and we get forcing action through this range starting in about October, November. Some would say that it's happens chance that we have midterms coming up in that exact window, and we have China news in that exact window. And whatever it is, I try to distance myself from the news and just use the charts. But it is true that catalysts are what create action, and the charts just help you find that. And so I'm thinking we stall out in range here, and depending on the results of said the Fed direction of the midterm, then we'll get our breakout side of this box, the 12,000 up into 12,700, 12,800. But until then, I think we're really going to start to get sticky in here. We'll see implied volatility draw back in, and everybody's going to be trying to swing for the fences, one side or the other. And usually that's when we all get stuck up and lose a bunch of capital, is when the market just quits moving altogether.
So, Josh, best way for people to follow you, get a hold of you, if you want to show your website, that's fine as well. How would they get a hold of you and contact you?
Yeah. So my personal handle on Twitter is JM Vala Trades. I'm there all the time. JM Vala _trades.
Yeah.
I guess I could just do this. Yeah.
Okay.
There I am. So
that's where you could find Josh.
That's where you can find me. If you're interested, I've got a link to our service here, Layup Trades, $1,000 a year. It's me and my buddy Ash from Texas. We run it. He runs a futures room. He's coded his own algos to watch the futures market. I watch stocks and predominantly trade option flow and options contracts. Always here to talk or take messages. Like I said, you can check us out on the website or not. I tried my best not to force that upon people. I'm here to help. I started not knowing a lick of things back in 2012, 2008, 2009, and just kind of worked myself through it through the loss of quite a bit of capital.
You're getting the hang of it yet?
Yeah. So finally, I think I'm starting to find the bottom.
All right, you're getting the hang of it.
I'm really an advocate of just being there for people who have questions.
Yeah. Where in Illinois are you, Josh?
I'm in Springfield, Illinois.
Oh, the capital. Okay. Say hi to for me.
Yeah.
All right. I grew up in Chicago, so
Oh,
anyone
well,
who's
most people
curious.
would think that's the capital.
Yeah, yeah. I of what crime?
Venture outside of Illinois, and that's exactly what they think.
Yeah, Al Capone was my great uncle. I'm kidding.
Oh,
So anyway,
that's awesome.
Josh, I'm so
Yes,
glad
sir.
things are good with the family, and appreciate you coming here and showing us some nice looks in the S&Ps for the next 48 hours. It's going to be pretty important. That 61.8 dig, is a stopping point for this break. And I want to thank you, my trading warrior brother, for showing up on the beginning of a month before a long holiday weekend. And I root for you.
Thanks, Dale. I appreciate it. Rooting for you too, and thanks so much for having me on. Anytime you have a blank spot, let me know, and I'd love to keep chatting with you.
All right, and you could use the poem. I have no copyright on it.
I'm definitely going to use that poem.
All right, man. All right, everyone.
Thanks, Dale. Have a great day.
Josh, Vala, people are thanking you, Alexander, Ingmar, and appreciate it. So, team, you could, everyone, you could join the team in 20 minutes on the Morning Edge. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Adios, everyone. Thanks once again, Josh.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.